everybody's upbeat. I mean, there's so much optimism here in Davos, it's pretty scary.
Yeah, you get a tingly feeling every time you walk out the door here. Everyone's in a good mood, which is good. It's good for my member firms, good for clients, good for markets, yes.
But fundamentals are in place. I mean, Christine Lagarde, the IIF, raised the growth forecast for most of the countries. We spoke to the DPM of Russia yesterday, and he said growth could be as high as 2%. So what gives?
Well, we had a lost decade of slow growth, many countries in recession, struggling through a whole host of challenges. The economy looks better now than it has pre-crisis, and people are celebrating that. I think people have been impatient for that recovery, and now it's happening.
But Tim, there must be a lot of, you must be concerned about the complacency in the market. I mean, we talk about geopolitics.
Sure.
We talk about major central banks moving at the same time, yet people don't really care.
Right.
Those are risks.
Well, there's lots of risks. We've levered up the global economy relative GDP, where there's a covenant-light lending going on. It feels very late cycle with respect to credit quality. Demographics are challenged. Trade frictions are challenged. But, people are kind of tossing that aside and looking at the underlying economics, which are pretty good.
The end of easy money.
The end of easy money, yes.
How is that being factored into the markets, into the economies? How do you see that panning out?
Sure. It's, markets are priced to perfection. And, look, they're giving the benefit of the doubt to Jay Powell and Governor Joe and Mark Carney and Mario Draghi, all of whom are seasoned veterans. So we're in really good hands. But the assumption is that they're going to transition to something else and do it smoothly. I suspect that's the case, but things can always go wrong.
Trump says that he can be credited for the rally in the economy and the turnaround in the U.S. economy. Can he?
Well, he gets some credit. Obviously, tax reform, tax cuts have been a huge boost. Right-sizing and balancing regulation, I think, has been very important. Animal spirits have come back in the corporate boardrooms. I think he deserves some credit to that. The recovery was in place before he got there, and I think he gave it a sort of a supercharged boost.
Have you been surprised by the somewhat warmer response to Trump now? I mean, when we spoke to Wall Street CEOs, they were pretty forthcoming as opposed to 1 year ago.
Well, he's been good for bottom line. He's been good for clients. He's been good for business. I think they're looking past the rhetorical smoke and trying to understand what the real policy agenda is. And the policy agenda is pretty positive.
What would you like to hear from Trump when he speaks on Friday?
Avoid any words of protectionism. I hope he embraces here economic integration, trade. We want to open markets, but we don't want to close domestic markets, and really embrace the global community.
Wilbur Ross said yesterday that a trade war is coming, and we saw tariffs being imposed on solar panels as well as washing machines. Is there the potential of a full-blown trade war between the U.S. and China, and what are the implications of that?
Sure, I hope not. There's a lot of Chinese officials here asking that question. So far, what we've seen is pretty garden variety trade response. The president's enforcing U.S. trade laws, and the fact base for those cases are pretty solid. But if we move beyond there, if we withdraw from NAFTA, for example, then I would think we're in a different space, and I'd really start to worry.
China has come out to say that it will implement further measures to open up its economy.
That's correct.
Possibly to, I guess, appease the U.S. What can China do to better relations between the two countries so that a trade war can be avoided?
Sure. Well, a lot of what the U.S. is asking is actually in China's best interest. Protecting intellectual property, for example. It protects U.S. firms, European firms, but also Chinese startups that also want property protection, property right protection. I think the Chinese know what to do. I think they're going to look for ways to engage the U.S. in a very cooperative spirit. But I also think they're not going to take a trade war lightly. There will be retaliation.
Currencies. Manis was mentioning how most of the currencies at record levels. How will that play out?
Well, I think, unfortunately, we heard some commentary yesterday.
About the weak dollar?
Look, I think policymakers and politicians have limited capacity to influence exchange rates over a medium term. Maybe they can push them around in the short term. It really is about underlying relative fundamentals. In that respect, that markets will determine exchange rates, not policymakers' rhetoric.
Okay, so we've got to talk about cryptocurrencies before we let you go. Yeah. Bitcoin, Ethereum. Is this the new thing, the start of a Ponzi scheme? What's the take and what's the sense you're getting as you speak to the people here?
I think there's some unbelievable and breathtaking technology underlying a lot of these cryptocurrencies. There are some questions about Bitcoin and other currencies themselves. I think the technology is real. I think we're in a whole different space.
The risk is?
Well, the risk is unknown in many instances. So that's one of our top policy agendas for 2018 is to better understand the risks, the systemic risk, but also the use cases for these technologies, which I think are pretty profound.
How can regulators around the world work together, cooperate, where the cryptocurrency space is concerned?
Sure, through the IIF. That's what we're there for, is to bring policymakers together, understand issues that cut across jurisdictions. And in fact, you'll see more out of us in the coming year.